Hello and welcome to Policy Watch, your roundup to all the policy stories of the week. Before we move ahead, we take a look at the top headlines of the day. The Reserve Bank ignores calls to cut policy rates, disappoints the Finance Ministry and the industry. RBI Governor D. Subbarao rules out intervention to shore up the rupee, says the currency should find a level based on demand and supply. Prime Minister Manmohan Singh asks ministers to step up efforts to push growth. And India's rice production is likely to fail expectations. International watchdog quotes poor monsoon as the primary reason. And joining us for this show is Shoma Banerjee, the National Policy Editor at Economic Times. Thanks a lot for joining us. Obviously, to begin with, we understand that it was a very hectic week. There was a lot of talk around RBI and whether they will comply with the Finance Ministry. Let's first take a look at what really happened this week on this story. It's mid-year credit policy review. RBI left interest rates unchanged for the fourth time in a row. The central bank, however, cut the cash reserve ratio by 25 basis points, which will infuse around 175 billion rupees of primary liquidity into the system. But by ignoring repeated calls by industry as well as the Finance Ministry to cut rates, the RBI seems to have miffed North Block. Here's a report.
Defying increased pressure from the government and North Block boss P. Chidambaram in particular, the Reserve Bank of India left interest rates on hold yet again in its monetary policy review. The central bank, however, cut the cash reserve ratio for banks by another 25 basis points, while the decision to leave the policy repo rate unchanged at 8% was in line with forecasts and economist surveys. Expectations for a rate cut had grown after the finance minister had outlined a plan to trim the country's hefty fiscal deficit. The Reserve Bank governor, on his part, had indicated that there might be some easing in rates in the near future.
In conjunction with the fiscal and other measures recently announced by the government, the Reserve Bank's monetary policy should work towards arresting the loss of growth momentum over the next few months.
A cut in interest rates has been pending since April, and the clamour by companies and investors for monetary easing has been getting louder every month. The demand for a rate cut has been bolstered by the recent statement by the Finance Minister, who on Monday outlined a plan to nearly halve the deficit in just over 4 years. The RBI still sees the danger of inflation creeping up in the next few months as inevitable, and smart money is still on Subbarao holding out for as long as he can, even if it means widening the rift with North Block mandarins. The central bank has, however, kept a window open, suggesting a reasonable likelihood of further policy easing in the fourth quarter of 2012-2013. Even that approach, it seems, is expected to be conditioned by the evolving growth-inflation dynamic in the months to come.
All right, Shoma, how do you really see this? First of all, obviously, there is a bit of a build-up when the Finance Minister is trying to lay some ground. But even then, no cut in interest rates.
Yeah, I mean, if I were today Mr. Chidambaram, I'm sure I would be very upset. And he has reason to be so. You see, the RBI governor had made it clear right from the beginning of this calendar year that he's not going to move, and he did not move. This is the fourth time, as you mentioned, yes, that they did not move on the interest rate cuts. Mr. Chidambaram, after he assumed office, really laid out a roadmap on fiscal consolidation, which looked to go haywire. It's still going haywire. You remember, the finance minister has revised the fiscal deficit numbers from what was budgeted. So he knows they are in trouble. But to be fair to him and to be fair to North Block, I think they really have laid out a map. They're trying to bring in consolidation as far as expenses are concerned, and they're trying to boost revenue collection. Now, revenue collection can only grow if growth kicks in, which is not happening at the moment. For growth to kick in, you need investments to come in.
Yes.
And financing problems is a big issue as far as investors are concerned. They were hoping the RBI was going to be a little more kinder this time and cut rates. But I think Governor Subbarao is taking the ground that, inflation is something which he wants to really tackle. And I wouldn't give too much of discredit to him either, because we have seen runaway inflation.
Yes.
And what with, you just mentioned about monsoons really not being that good, supply side constraints still kind of kicking in.
Yes.
Everyday prices are up and the opposition is making a big thing out of it. So the RBI governor, I think, took it on his stride and tried to play it slow on it, did not go in for the cut. But as far as Mr. Chidambaram is concerned, who's really looking at that market index, this sure has come as a dampener for him as well as the industry.
In terms of the CRR cut that came in, it's about 25 basis points. So to some extent, that can, make things easier.
Yeah, so what the CRR cut does is, like you mentioned, it pumps in more liquidity into the system because the banks have more money to play with.
Yes.
So while that is good, but remember, it has an impact again on money flow and inflation. And so it's like a vicious circle. I mean, the RBI governor also had very little options to play with. The easiest and the best thing which everybody wanted was a 25 basis minimum rate cut. But then I think he's been a little more cautious than what was being expected, given what the finance ministry has said. And I think the RBI governor should be getting credit to some extent, because we're dealing with a very uncertain political economy. Yes. It's only now that you have a rejuvenated cabinet team, and we expect now that some allies are out, that the government is going to do its doing. But, till now, it's more promise and less action because of political uncertainties. Given all that in mind, I think Subbarao, who's a cautious man, decided to, play safe over here.
When you get into a situation like this, what are the options that the political leadership really has? The finance minister, what are the options that he can really have? The brief is very clear coming from the top, from the prime minister. There is a particular approach that has been laid forward. What are the things that, the finance minister can really do?
So basically he's dealing with fiscal deficit on one side, which means that your revenues earning is less than what your expenditure is.
Yes.
How can you increase revenue straight away? Yes. Okay, one is when you have better growth, so investments grow, so returns are better, and you get better tax collection. But that's a long-term thing. Yes. What can they do immediately? One, spectrum. So from spectrum auction, they can get something which will shore up their revenue. Two, sell away the excess land, which Kelkar committee has recommended, so they get some money out of that.
Yes.
Sell away government stake, minority stake in some of the companies. Okay. So, these are the things which are on the table. It's not that it's not on the table. These are the things which can help them get up the revenue and so bridge the fiscal deficit to some extent. That is what they're really trying to do. But yes, with a little help with an interest rate cut, maybe the sentiment would have been better. Maybe some of the stuck investments could come in. And remember, we're also looking at inflows from outside. Yes. So a rate cut again there, could give out the right indications to investors that India really wants people to come in.
Yes.
So from all those sides, I think Mr. Chidambaram has very little options, so does Governor Subbarao, and they both are doing the best as far as they can concern.
In fact, a number of messages and signals are coming in from the political side in this entire debate. We'll take a short break now. When we come back, we take a look at all these other aspects, including how the currency should be treated from here on. Short break now. Welcome back on Policy Watch. Shoma, obviously the focus is at least over the last few weeks or so, since the second coming, so to say, has been on investments. There's this entire talk about National Investment Board. Again, the Prime Minister, while addressing his new Council of Ministers, is also once again stressing on making sure that all the avenues to clear out the idea of investment is also addressed. To what extent do you think can the government really pursue investment, and what are the roadblocks?
Well, they've highlighted 5 roadblocks. The Prime Minister spoke of 3, the Finance Minister highlighted 5. And remember, for the first time, I think, the Finance Minister in his presentation to the new cabinet said, there are projects worth 7.5 lakh crore which are stuck midway. Now, that's a huge admission by the government. And they've said it's stuck because of lack of approvals. Approvals from, on 5 counts, environment and forest, land acquisition, fuel supply, regulatory approvals, and some others. So primarily, these are the counts on which these approvals are stuck. So projects where money is actually sunk halfway, but are not being able to move ahead because of these clearances not being in place. Yes. So what the government can really do, and I think they have set their task ahead, is to see that these clearances can be brought in, can be pushed. NIB is one such example which they wanted to do, to push bigger projects, 1,000 crore plus into it. They are pushing environment, fuel supplies, so coal, power, all those guys, as well as financing. Financing is one more issue which they mentioned. So 4 I had mentioned, the 5th is financing. So the finance minister and the prime minister have really said that these are the roadblocks that we know are holding up projects. They're more concerned about the fact that there's such a lot of it which is in the pipeline. Yes. Apart from that, they have said investments are low. So yes, I think the government is pretty sorted when it comes to seeing, and I think they're doing a lot of introspection. If they're being able to admit to themselves that this is where we are stuck, this is what we need to do, I think the government is really doing a good job. And it just remains to be seen if the new guys, the new ministers, really take their job seriously and get going on this.
We'll have a discussion on that aspect as well. But before that, obviously, the other aspect that's also becoming really critical and was addressed this week was that of currency. How is the rupee going to fare? Let's just look into this report. The Reserve Bank governor, who is under fire from a section of policymakers, has reiterated that the central bank will not intervene in the forex markets for buying dollars. Now, Subba Rao has made it clear that the RBI will not intervene in the market with a target for the currency, as it believes the rupee should find a level based on demand and supply, irrespective of the size of the cover. The report.
The Reserve Bank of India said that it will not buy US dollars from the currency market to boost the foreign exchange reserves, as the coverage of imports and external debt has fallen to multi-year lows. India's currency has been weakening in the past few weeks as the demand for the dollar continues to be strong in the face of increased oil and gold imports in the country. 51 to 54 rupees to the dollar mark, up from the recorded June low of 57.32 rupees. The rupee's latest fall against the greenback is 4.8% in the September quarter, after depreciating 9.3% in June quarter. Last year, the rupee fell 6.8%, making it among the worst performing currency in Asia. According to data released by the RBI this month, the foreign exchange reserves in the country fell by $502.4 million to $293.97 billion US dollars due to fall in the currency assets.
All right, Shoma, how do you really see this happening? Obviously, to some extent, the RBI doesn't really want to intervene. Will this hurt, or is this the right policy?
Well, it's a very difficult situation. I think, as far as we know, Governor Subba Rao is very, very concerned about the current account deficit. It is a big area of concern. I think they're looking at a negative $70.3 billion by the end of this year, which is huge. Okay. That's the current account deficit. On the other hand, the industry or even the government is very concerned about the depreciating rupee because, one, it impacts your import bills. So, your crude oil import bill will go haywire, which means your trade balance goes up in the air. Yes. Second, exporters are hurt, and at a time when the world economy is really into a recessionary mode, Europe is not doing well, US is still not bouncing back. To have your rupee behaving the way it is very difficult. But, I think Governor Subba Rao also believes in sending out the right signals that we are not yet back into those days where every time the rupee went for a jinx, government intervened, bought something and gave you an artificial rate. So these are signals to the outside world that India is a more matured economy.
We are letting
market, so a little more confidence in the market, letting market places play and find their level. Well, it may take a toll in the short term, and I'm sure some guys are really cursing Governor Subba Rao on this. It is difficult. I'm sure it's very difficult on his part also. I'm sure he wants growth to come back, and rupee, the currency, how it behaves makes a huge lot of difference. But given what it is, I think he's gone with leaving it until.
It seems the entire debate on economy is really coming down to that short-term versus long-term aspect.
Exactly.
And, you know, even going by that, even the Prime Minister, while talking to his Council of Ministers, very categorically said that we are running against the political calendar.
That's a very important point you've mentioned, because this is exactly what is making things more difficult. Because remember, they are already into their last 1.5 years before the polls. That is, if polls are in 2014, which means the last year is usually given to populist policies and to making people happy. So, you know, you should have gone haywire as far as economy is concerned. You should have just done things to please the people. But I think the Prime Minister did some really walking the talk, you know, which we don't see so often, when he said we have to work against the political calendar. The political calendar really, there's so much pressure from everywhere to just, you know, forget fundamentals, forget economy. I mean, you just have to please the voters at the point. So I think it needs a lot of grit, a lot of courage, and a lot of conviction, both on part of the government as well as the RBI, to walk the talk on what they are doing at the moment.
All right, we'll take a short break now, but when we come back, more discussions on how to really address this entire problem, especially politically, when you have the entire opposition really, to some extent, ganging up against the government. Now, well, let's take a look at some of the cabinet decisions this week. Under pressure from the opposition for hurting the budget of the common man, the Union Cabinet on Thursday took a number of measures to address the concerns of farmers as well as daily wagers. Let's listen in.
Asking them not to worry about opposition allegations, the Prime Minister urged his refurbished Council of Ministers to focus on governance. Manmohan Singh also stressed upon the need that younger ministers must be given more work and be made to feel a part of the policy process. Conscious of the fact that the government was working against the political calendar, he called for a common understanding to work out mechanisms and remedial measures to tackle these critical deficiencies on a priority basis. The Prime Minister said, and I quote, "I'm aware that we are working against the political calendar, but we should not lose sight of the fact that we are also involved in the task of nation building. Our responsibilities and our commitment therefore need to transcend other considerations." The Prime Minister also said that high fiscal deficit is a deterrent for domestic and foreign investments and that the government will have to overcome constraints to achieve the target of investment in infrastructure sectors. He said, and I quote, "While we should take justifiable pride in our successes, it is important to recognize that we are now also experiencing the fallout of difficult economic conditions worldwide. As a result, our growth has decelerated, our exports have fallen, and our fiscal deficits are expanding." With less than 2 years to go before the next elections scheduled in 2014, the UPA government is hoping the new look of Council of Ministers will help the nation rise above the challenges facing the government. Smriti Rastogi with Bilal Zaidi for Rajya Sabha TV.
All right. In terms of the cabinet decisions, the government has also decided to raise the MSP price of a number of crops that have come up as well. So that's to some extent trying to address the concerns of the farmer. At the same time, they've also brought in some changes to the bills that were there for the working daily wager. Now that is supposed to bring in some kind of easing off the burden of the really weaker section. To some extent, perhaps sending out a message that on one hand, the economic scenario is forcing the government to take some unpopular measures. On the other, perhaps it's trying to safeguard the interest of the weaker sections as well. So politically, trying to send out some strong messages.
Yeah, I mean, the farmer and the Aam Aadmi, they are their main constituencies. So by doing that, the MSP, surely is looking at higher prices for the farmer. But remember, again, higher MSP means higher food prices. Yes. So, they really can't do much there. But you're right. I mean, they need to send out some political signals as well. And they have done that by taking these 2 steps in the cabinet meeting.
There's also this entire talk about, whether the Prime Minister, especially with the new team around, especially with the young ones in crucial, portfolios, including power and others, To what extent do you think that the Prime Minister should now be able to really do away with all these other roadblocks that have been done?
I think the first thing that we need to take cognizance is this is a UPA cabinet minus Trinamool.
Yes.
Remember, I mean, Trinamool was only one minister, but Trinamool was a big deterrent for this government, no matter what it was. Because even if the minister was present, he did not always speak his mind there. So, you know, it left the cabinet in a very, very disillusioned fashion. They couldn't take decisions. They went all prepared. And most of the ministers were really not there. I think the message from the Prime Minister to this team was very important. And so was it from the Finance Minister. The Prime Minister made it clear that, you know, it's time to pull up your socks, it's time to do your best, and it's time to really put in your best. And Mr. Chidambaram, if I quote him rightly, said, the next 5 months is what I need from you to really work hard, and I can promise you a good budget and a good financial year next year. So, you know, the next 5 months, a lot needs to be done. Now, let's look at how the cabinet has been formed. And I think there is a method in that madness. We heard all these things about state representations, etc., but just look at it. We have power with Jyotiraditya Scindia, but Minister of State independent charge. So who remains the ultimate authority? The Prime Minister himself. Corporate Affairs independent charge with Sachin Pilot. The Prime Minister remains, or the Prime Minister's office plays a very crucial role. You've got Mr. Bansal into the railways. After 16 years, Congress gets back there. The first noise he makes is of tariff rationalization or tariffs going up, which means that they mean business. They want to get the railways back into the shape. Roads, ports, shipping, coal, I mean, these are the areas, infrastructure areas. And remember, they have been harping about 1 trillion investments in this. So I think the Prime Minister has done a very, very scientific and methodic way of doing things. People expected Rahul Gandhi's coming or not coming, but I think Rahul Gandhi's men have come in. And I think it's time now for them to show their candor. They show their ability. You know, all this while they complained, or there was this huge thing that their MOSs, they don't have work, which is what the Prime Minister referred to. But now you're independent charge. So tomorrow, if you don't see the power sector really moving, you have to find out what's wrong with Mr. Scindia. You expect the Scindias, the pilots, the Jitin Prasad, the Milinderas to really step up, to step out and to show that they mean business and they can bring in fresh ideas. I think the Prime Minister is really banking on that. And let me tell you, all these guys are also Rahul Gandhi's men. So they better prove what their mettle is at this point, given the opportunity, or they are in for trouble.
All right. So just wrapping up, just the final takeaways, according to you, over this last week, the message that has really gone.
I think it's a very, very crucial week because you had both political and economic signals being sent, which is not the case usually. You either have political signals or economic signals. So much so that I think the limelight was taken away to some extent from the scamsters, or the scam deluge that we have every day, a scam a day. So the Subramaniam Swamis, the Kejriwals, I'm not diminishing or down, you know, littling them, because they are really bringing up issues of importance which need to be debated. You had CAG, you had RIL, you had Subramaniam Swami and Rahul Gandhi. But you know, at the end of the week, like, you have identified the main decisions, you've identified on what the government has really done on both economics and politics. Politics, because of the cabinet reshuffle, the kind of people brought in, the kind of responsibilities given, and very importantly, the Prime Minister's address to the cabinet as well as that of the Finance Minister. Admission that yes, we are in trouble. Admission that the economy is in trouble, but we need to move up. That's, I think, the biggest takeaway this week.
All right. Thanks a lot, Shoma, for all your inputs there. Of course, at the end of the day, it's been a very hectic week. Obviously, the RBI continues to be largely defensive, and we'll really have to see how the Finance Minister now addresses all these concerns around boosting the growth rate. At the same time, also talks around the currency and whether that was addressed or not. For the time being, maybe not really good news for the exporters, but it's also something that many believe that will be addressed as we really go ahead. And finally, of course, as the Finance Minister pointed out, just about 5 more months before the government really comes in with another budget. Will it really be populist? Will the government by that time be confident enough to have really put in forward their best foot? That's something we'll have to really look out for. Thanks a lot for watching Policy Watch this week.